I'd like to start by talking about gold, and I think it's a very opportune time to be looking at gold for a number of reasons. And I'll just run through some charts, and then after that I'll give you an overview of McEwen mining. So cautionary statement, it really says if you're risk adverse, don't bother buying our shares. It's very simple. I want to look at the broad market first, and there are two charts on here. There are copies at our booth of this presentation if you want them. But this is just looking at the S&P divided by the XAU, or the Senior Gold Index. And you can see running from 1986 to present, the tech bubble in 1999, and we're now well above that. So it would appear that the broad market is reaching historic highs. Not to say it won't go higher, but there's a lot of downside possibility here. And the other is just looking at the NASDAQ, so looking at the two markets. The governments around the world are saying there's not much inflation, and they say commodities prices are low, and that's one indication. And here, this is a Goldman Sachs commodity index divided by the S&P 500 running from 1970 forward. So 48 years of history, and it's showing over on the bottom right, circled in green, is where this index is, and it's really just showing relative values of commodities to equities. So when it's below the red line, commodities are cheap, and when it's above the red line, commodities are expensive relative to equities. And right now we're at a 48-year low in commodities, which is rather odd because it seems to be signaling that the economies around the world aren't growing as fast as people would lead you to believe. Looking at bare gold markets, and we're using the Barron Gold Mining Index, and it's going over the last 77 years. And during that period, there were 8 bear markets for gold. And in red on this diagram is the last one we were in. So looking at it, we're starting at the highs, which was 100% at the top on the left, and how far these various bear markets lasted and how deep, how much they lost. So putting some sense to this graph, it's duration of weeks on the bottom scale. So off on the far right, you have better than 240 weeks. And you're seeing how we fell from, we got down to below 20% of the value, 20% of the high. But what I take from this is we've been in in the worst bear market we've seen. It's been very deep and long, and the downside risk is relatively low. There's not much further to go before it's zero. And I don't think that's going to happen. If we look at the bull markets during the same period, including the one, and you might not agree with me right now, but I believe we started the bull in the beginning of 2016. And we're up about 100% right now, and that's shown in red. But it's important to appreciate that there were 6 previous bull markets, and of those, 4 of them rose from bottom to top 600% or more. And from where we are today, if you use that as a historical measure, you'd say there's a 67% probability of better than a 3x upside from here. So you have low downside risk. The broad market might have more downside risk, and the upside could be 3 times where it is today in gold equities. There's an invisible bull market. Again, the broad media is virtually out of the market. They say there is no reason to be buying gold. But if you look at from the beginning of 16 till now, and you look at how the S&P has performed, it's up 32%, the Dow is up 43%, and MUX is our stock symbol for McEwen Mining. It's up just over 100%. So it's 3 times what the S&P has done. And I bring it up, we're not unique. There are a number of gold stocks that are doing this, that have performed like this since the beginning of 16. And somewhere along the way, this is going to convert into interest in the broad market. Looking at peer performance, and this is coming from, again, the beginning of 16. People can buy indices, feeling that's a safer way to do it. On the right-hand side, you can see our stock symbol, the GDXJ, which is of the juniors. The GDX is the senior golds. Then some other favorite companies, Torex, Premier, New Gold, or former favorites. We've been able to outperform them, and part of that is due to the fact that our stock, according to Bloomberg, has one of the highest betas in the industry, moving its swings much more than the gold price. Both, I should say, up, but also down. There's a double-edged sword there that you have to be aware of. Another indication to me that this bull market is alive, if you went back 6 months ago and you were an exploration company and put out a good drill hole, the market just did nothing. Nothing at all. And I've just selected 6 companies that over the last 3 months have put out good drill results, and they've been up anywhere from 50 to 500% in just the last 3 months. And you might say, well, why are they moving up? One, the gold market has just been pushed to the floor. No one thinks there's any potential there. So most of the selling has occurred. And the volumes are very light. So when you see a good result and you start buying, they start moving quickly. And that's, to me, another indication we're in a bull market. And this industry needs a broader attention to the potential. So when the media starts saying, look, you can make money here again, it doesn't mean if you bought back in 14 or 15, but the rest of the market is going to rotate into this area. So a couple of the complaints about the industry is insider ownership is low by many of the players. In McEwen Mining, I own 24% of the company. So we're much higher than most of the industry. If you look at compensation, CEO compensation, they're getting paid a lot. So this is looking at the 15 CEOs in the last 7 years of the companies listed below, and together they've received just under $700 million in compensation in the last 7 years. McEwen Mining is off on the right hand. I got a salary increase 3 years ago. I now get $1 a year. So during that same period, I've gotten $3. In terms of performance, for all that pay, you can see that they're not delivering much performance. I'm not happy to say that we're down 2%, but it's much better than all these other companies. In our treasury, we have $51 million. Our debt, we just took on debt for the first time to facilitate the construction of our mine in Nevada. We took on $53 million. We have a small yield. I get $1 a year, as I said, and by my election, I've chosen to receive no options or no bonuses. My equity investment cost $136 million. That's my investment in the shares. And just in August, I put another $25 million in the form of half of that debt issue. I'm a big believer in gold, and I'm a believer in this. And I wanted to be in a position. When I built Gold Corp, I was the largest individual shareholder. And I thought I'd like to change that model slightly so that I was in exactly the same position as all of my shareholders. And that was, I'm only going to make money with a higher share price, and my shareholders are only making money that way. And you think of early corporations, you had people sitting around the table that all had an interest in the company. And they're all working to make that more valuable. And I think we lost track of that somewhere in the public markets. And I just want to try to move back there, and maybe there's an example. Maybe some of these other people take $1 a year along the way. In terms of liquidity, this is the 3-year average of the daily trading volumes. You can see we're quite liquid. Most of our trade is on New York. We have growth in our production base. McEwen Mining started in 2012. Prior to that, there was a company called U.S. Gold, which I owned about 25% of, and another one, Minera Andes. And we put the two of them together. One had production coming out of Argentina, and the other had a pipeline of development projects in Mexico and here in America. And I thought, well, the cash flow from one would finance the other. Unfortunately, the metal price dropped, and we had Argentina interrupted some of that cash flow. It's come back. This year we'll grow about 15%, and we have organically, over on the right, 3 projects that over the next 4 years could increase our production by 50% from the 200,000 ounces we're forecasting for next year. Another aspect of the market, it's tied to the low liquidity, is the short positions that are in various stocks. And on the left-hand side, I'm showing you a picture of a cannabis stock called Tilray. And it had a phenomenal run, and it was largely driven by a small float and a large short position. So this stock, I wish it happened in gold, but it started in July. It went public at $17, and it was up to about $150, and a day or two later it spiked to $300 intraday because of the short position in it. And it's a classic short squeeze. The short positions in the market, in the gold stocks, will one day be fuel for the fire when you have this limited liquidity and people start buying and the shorts have to cover. In our case, we seem to have a very large short position. It would take 25 days of trading to cover our short. And you might say, no, why do we have a short position? One, we're a liquid trader, and we're in 57 indices and mutual funds. And these groups lend out their stock, and you can borrow stock for shorting purposes, and the lease rate is 1.15% on our stock. So, sorry? Yes. So, and that's what's been hitting a lot of the gold industry, that people are just renting out their stock to earn an increased yield. But as I said, it can go the other way when sentiment turns, and I believe it's starting to turn. So this is a picture of McEwen Mining. First, U.S. Gold. It was a company that was around for about 20 years, and I bought into it first in 2005, August 2005. It was 36 cents, and I bought a third of the company, and it ran to... we changed the management and said we're going to explore. It traded OTC. We're going to get it listed on a recognized exchange. We first got it listed on the Toronto Stock Exchange, then the American Stock Exchange, and then the New York Stock Exchange came and asked us to list on it. But in the space of about 7 or 8 months, we went from 36 cents to $4.50 doing an issue, and then just shy of $10. We explored, then it dropped down in the global financial crisis to about 60 cents. We made a discovery, and the gold market came back, and we ran up again almost to $10. Then in 2015, which was the low, we were back down below $1. And we had free cash flow then. We bought back, had a buyback program, and we implemented our yield, because I didn't want it. New York threatened to delist us, and I said, well, we can't do that. We came back up to just under $5, and right now we're around $2.14, $2.16. But what I want to point out here is the technical picture. And so when you look in the period between 2005 to 2012 or 11, you have this big drop, and that would be an inverted head and shoulders pattern. And you can see a similar pattern developing right now, where you may have well, I'm hopeful, you have a return back up to higher levels. We have 2.3 million average daily volume right now, outstanding 337 million shares. There's another 5 million shares in options to management to take us fully diluted to 342 million. Market cap just over 700 million. And this beta is just a measure of the volatility, but it's 2.9, and I mentioned it earlier on. Bloomberg puts this as one of the highest in the industry. So if you're bullish on gold and you want a gold stock that might run, you might look at ourselves. And then the pie chart's just showing that 45% of our shareholder base is retail, 31% institutional, and 24% myself. In my life before McEwen Mining, I ran a company called Gold Corp, built it, and during the last 13 years there, the share price compounded at better than 31% a year. During that period, we outperformed Bill Gates and Warren Buffett by a wide margin, and we outperformed the entire gold mining industry. That was driven by a wonderful discovery at our Red Lake mine, and then a combination being a largest individual shareholder, a financial discipline. That's what I'd like to try to do with McEwen Mining. And you might say, well, this was a good run. Why would you want to do anything more with this? One, the gold mining industry offers opportunity, and two, it's financed a lot of philanthropic work that my wife and I have done in the space of regenerative medicine, research, stem cell research, and education and leadership. It's really amazing what you can do with $1 in your bank account. You can look at it in your bank account, and it's just a line. But if you put it, and it has benefit for many more people, it's much more gratifying. And we have this Center for Regenerative Medicine. It's one of the top places in the world today. Bayer Pharmaceutical came along and committed $225 million to research in regenerative medicine. We weren't the recipient of all of that, some of it, but we were the first place in the world they put their money. And we hope to, one of the works, it's getting away from gold, but it is close to my heart, is doing work on hearts where when you have a heart attack, you get your, a part of your heart the muscle turns to scar tissue, and it no longer functions as well, and that's when you need a pacemaker, a new heart, or an artificial heart. Our researchers have been able to put it in primates, and it's currently in pigs. Human trials will be 3 years from now, but they are injecting 1 billion heart cells into the heart and growing muscle tissue. The importance of this is that if it's successful, it will eliminate pacemakers, artificial hearts, and heart transplants. And so for my wife and I, we look at this area as having the potential for a profound impact on the delivery of healthcare globally. And we gave out a $100,000 award every year for innovation in stem cell research, and the first researcher to get our award was a Japanese researcher called Shinya Yamanaka, and he was able to take a skin cell and reverse engineer it into a stem cell and do away with the ethical issues about dealing with embryonic stem cells. And a year and a half after he got our prize, he got a Nobel Prize for that work. So, thank you. We just have to figure out how we do more, get more of those people, making us all healthier. McEwen Mining operates in North and South America. We have 3 mines. We're building a 4th in Nevada right now, and we have a large copper project. We're building in Nevada in what's called the Cortez Trend. It's 25 miles south of Barrick's largest gold mine, Cortez Hills. Nevada, I'm sure you all know, is a very large gold producing area, but if you just look at these deposits in Nevada, they account for over 200 million ounces of gold. The Gold Bar project is a brownfield site. It was operated in the 80s and closed. It's an open pit heap leach mine. We did a feasibility study on it in 17. We'd been permitting for 4.5 years. We got our permit last November, and we could start exploring again. So it's 1 gram material. It'd be 60 to 70,000 ounces a year. Cash costs all in under $850. And the life was about just over 6 years. And since we started exploring, we put out some resource updates. We bought some property next door. By the end of the year, we should be 8 or 9 year life. And it's 3-year payback with 23% internal rate of return at current prices. When we were exploring here and putting the mine in production, we were only looking for oxide ore deposits that were shallow and could be mined by open pit heap leach methods. There is also sulfide material, but if you put the sulfide material in a heap leach, you won't get the recoveries and your costs will go up. So we avoided sulfides. One of the things that's happening in the industry is that the big companies are getting rid of a lot of their exploration departments over the last couple of years. It means firing a lot of their knowledge. And they're also selling parts of their operations. We've been lucky enough to hire some of the senior people from Barrick and Newmont, and they came along and they said, you know, you're on this fault system that Barrick, in the upper right-hand corner, there's 50 million ounces of gold between their Cortez Hills pipeline, 4 Mile discovery, and Gold Rush. You're on the same fault. You're 25 miles below it. You have this gold on surface oxides, but you also have sulfides. And the sulfides that are, these are drill core sitting in the left-hand side. And one of the fellows said, well, that just looks like gold strike. And so they said there are some windows into what's called the lower plate, which is the formation that accounts for most of the gold at Barrick's situation at Gold Strike in the Carlin Trend. And next, this coming year, we'll be drilling for those deeper targets to see if they exist, because they feel it's coming close to surface. I can't say it's there, but we're certainly going to be looking for it, and it'd be exciting if we hit there. If you look at Nevada, it's like a lot of mining districts. They start out mining the surface, and they keep probing deeper for situations. And Cortez Hills is between 600 and 900 meters below surface. Gold Strike is down around that depth as well. So that's the basis for some of the geologists' optimism here. I'll take you from Nevada into Canada up into Timmins, which is another of the world's great gold producing districts. In April of last year, we bought a company called Lexum VG that had properties and about 2.4 million ounces of gold in resource. And then in October, we bought another group of properties from a company called Primero Gold. And it was the Stock Mine and Black Fox, which are shown in the middle and the right-hand side of that rectangle on the right-hand side. For that purchase, we thought we got a pretty good deal. We paid 6 cents on the dollar. The previous owner had bought the Stock and Black Fox properties for $300 million of stock, and they assumed $140 million of liabilities when they bought that company, and they put $120 million in between 2014 and October of 2017 when we bought it. We paid $35 million, our purchase price. 27 million of that was cash. We got 1.25 million ounces of gold. We've got a mine there. I'd say it's a short life mine, but we think we might be able to extend it. Right now it's high cost, but about 50,000 ounces a year. It has a producing mill where we can take the ore from the purchase we made at Lexum, which is sitting on the left-hand side, and we can ship it to there. And it had multiple exploration targets, and it came with $180 million of tax pools, meaning if we make money here, it's sheltered by $180 million. So it'll take a couple of years to do that. So we've been exploring there. We believe, again, like Nevada, that there could be deep potential here. In the Timmins camp, where the mine is located, that's just sitting off center to the left, and the lines are showing between 1,000, the first horizontal line is surface, the next one is 1,000 meters down, the next one is 2,000 meters down. And you can see there are various mines here. The reds are showing their ore bodies going down to 1,500 to 2,000 meters, and the 3 properties that we acquired are all sitting less than 1,000 meters. So part of our exploration program is to test for depth extensions. This is looking at the Black Fox mine. The green line is surface, and it's showing the outline of the pit. That was the starting operation. And then the red is showing the resources as defined at greater than 10 grams per ton. So it has a lot of high grade, but the way they mined this, they didn't have a good mine plan, they didn't have a good understanding of the geology, and they started going down a ramp, and the transit time was over an hour one way, and it just kept increasing their costs, congestion. So we're exploring in that dashed yellow rectangle. We're looking to see if we can convert a lot of those resources into reserves that can be mined. The deepest hole we've drilled to date is just over 1,000 meters, and it's showing it at the bottom middle, 55 grams per ton, just over a meter. There's a cup just on the right. You can see 44 grams over 7.5 meters, and 320 grams over just over half a meter sitting on the left. That's some encouragement, but we've been exploring outside of the mine site. At the bottom edge of the property, we encountered 639 grams, and we've added so far 12% to the resources on the property. Where there's the mill, they weren't exploring at all, and we've been drilling there and having a lot of encouragement, finding intervals and mineralization close to surface that now extend over a distance of 3 kilometers or just a little over 2 miles. That has the potential for being, some portion of it being mined by open pit. So that's leaving Timmins. We'll go to Mexico. We have had an open pit heap leach mine there that we stopped mining in May. It's going to be, the heap leach will keep operating for the next 2 years. And we had a silver project that got permitted to build in 2015, but the silver price was low. So we said, why do you want to build it when the silver price is low and the economics are bad? You're going to get single-digit returns. But we were confident the silver price is going up and the silver is not going to go away. So leave it in there until it's economic. So in that time, we looked at working the numbers. We've reduced the capital cost. We think we have an opportunity to have a 12-year life here. And we'll do something environmentally, which I think is quite elegant. This silver deposit is located about 5 miles away from the gold mine where we have the pit. And we said, well, why don't we put all of the production facilities, rather than build a standalone, build it where we have our gold mine and use the pit that we dug as a place to put all our tailings. So it reduces our reclamation costs, it improves all sorts of things in terms of capital utilization and water management, which are all really important in mining today. So that's moving along. We'll have numbers out in the beginning of the year. We have a copper project that I happen to think is one of our, it's a wild card. If you look at the indicated and inferred resources, you have just under 30 billion pounds of copper. It's one of the larger copper deposits outside of the majors. We did and to give you a sense, the preliminary economic assessment, just conscious of the time, 415 million pounds of copper a year it's projected to produce. Capital is quite a bit larger than our market cap right now, so we're looking for a joint venture partner. At $3 copper, would pay back in less than 3 years. and run for 36 years. If it were in production today, this is looking at all the copper mines in the world. It'd be the 26th largest, and it would be in the bottom of the cost curve, the bottom quartile of the cost curve globally. So it's a very long life asset, very robust. If you put it on a gold equivalent basis, it would be, between all of the resources, it would be 78 million ounces of gold equivalent, producing at under $500 an ounce. We also have a property in Argentina. It's a joint venture with a good operator, Hochschild. They own 51%, we're 49%, and we surround Goldcorp's largest gold mine, their Cerro Negro mine. It's high grade. And I come back to our reverse head and shoulders, and I'd like to thank you very much for listening.